Everyone. Today is the 20th of February. This is Brad Matheny. This is the Plan Your Trade video. Let's go ahead and get started. We're going to look here at the ES chart, but first I'm going to add two comments here. Actually, let's go to the SPY. And what I want to talk about is the definitions that I'm going to be using, and I'm going to start adding these context values. Let's just add them right up here in a place where you could see. So we're going to add it right here. So we're going to go master trend uh, IDs. Basically, what we're going to look at is long term, short term, intermediate term, and short term. So what we're looking at here, guys, is we'll call it interterm, so we can have some shortness and structure here. Is we're going to start looking at these from a concept of, hey, I want you all to be aware of what's actually going on trend wise, so we can be aware of this. So we had a breakout that occurred back over here. You can see I highlighted it here, where we had a breakout type of a move to the upside, breaking through this trend right here, where we had more of a downward cycle trend here. We had a potential breakout to the upside right over here. So we are basically right now long term bullish, intermediate term bullish, and short term bullish on the SPY. Okay. And this is now, I want you to realize that we're cleared for a rally. So I don't want anybody to be too confused about, what's actually going on here. We are basically cleared for a good, solid rally in the QQQ or in the SPY. Now, in the QQQ, which has been waiting for this clearing of this upward trend, we have now gotten a bullish breakout here. So we'll push this in here. We had been waiting for a close up above this high level to get long term. We have a close above this level here. So I will map these so everyone can see there's a bullish move there. We have the bullish breakout taking place here above these highs. And as we rolled back down here, you can see we took out some rolling lows to get to this level, but we're now up above these highs, clearly trying to move higher. And this is going to give us a very solid breakaway bullish type of a rally. We are again on the QQQs still bullish. And why? It's because we've gotten above this level. I'll mark it as kind of a bright blue. And we are now climbing above this level. I'll mark it a bright blue. This is telling us here that we are climbing to new highs. Okay. And those new highs breaking above this level and breaking above this level are the most recent trends indicating that we are in a bullish trend. So when I talk to you about my warning of a potential breakdown, it's because, we have a lot of air between this area and this area and this area, which is the ultimate low down here, recent ultimate low or unique low. We have a lot of air. If we were to kind of break down here, you're looking at a 3 to 5 to maybe 7% type of a breakdown, 38, 39 points, possibly to 15, 16, 17 points down here, which would be a fairly substantial rollover, 3 to 3.5% rollover. And at the same point in time, we come to the SPY and you look at this level and you realize again that if we were to have a rollover, let me get rid of some of these. You can take a look at exactly what's going on over here. Get rid of that, that, and that. And that 609.35 is still valid. But if we were to have a rollover here, looking at these most recent support levels, I mean, we have to go all the way back down to here. I'm just getting rid of these little intermediate lines. We'd have to go all the way back to, oop, I want that. That's a pullback. We would have to go all the way back from current levels down to here, 2.5% pullback down to this low, 3.5%, 3.6% pullback, and a 6.18% pullback. So remember that if we do roll potentially off any of these warnings of a potential pullback, the concept here, folks, is that we would go to this low. Breaking this low, we would go to this low down here, and breaking this low, we would go down to this low down here. So you have to remember, we have a very clean breakaway bullish trending because of these new higher highs and higher closes. But we also have the risk of a broad rotation. And I want you to remember that, markets move in up and down cycles. So when we look at this, and you see how we're moving through these cycles, remember that you don't get straight up moves. You get rally, pullback, rally, pullback, rally, pullback. So when you're looking at these moves and you're trying to decide what's going on, I want you to come over here and try to remember that we're at a kind of a rally pullback, rally possible pullback, trying to move out of this sideways trending. So when I tell you that we are bullish, we've moved into broad bullish trending, which we have short term, intermediate term, and long term bullish trending. When I warn that we're looking at potentially a pullback, I want you to understand that this could be a pullback in a broad trend, meaning a pullback like this, or it could be a pullback like this sideways. A pullback can be basically a general pullback in the market. So, okay, we are done with the technical lecture. I'm going to try to keep these on every chart from here on out. This area right here, master trend ID, is going to be written on every chart so you can see it. That includes gold, silver, Bitcoin, SPY, and QQQ. So you can see where we're at. We're technically bullish, short term, intermediate, long term. There is no bearish trending yet. I'm going to warn potentially of a pullback, which I still think is a very real possibility. So we're going to come over to the SPY. We're going to take a look here. We're looking at rotation today in trending mode. Rotation typically means that we're going to get some sideways price action. You can see the markets are down about 0.25%. This is daily. We've really been struggling for range here. When you take a look at this, we have been struggling to get out with very low, moderate low volume. I am expecting today's rotation to kind of be in this kind of sideways range. I still think we need to watch this 609.35 level, which is pretty much right there. If we get back below that 609.35 level, I would, have a much stronger inclination to think that we're going to get some kind of a flush out low. If we stay above that 609.35 level, and particularly above the 611.50, which you can see we're right at pretty much right now, then we're generally bullish. So the 611.50 level pretty much tells me that we're bullish up in that area. We get anywhere below that, and we have to start looking at the 609.35 level for a breakdown. And again, I do have my projection as a breakdown occurring back over here near March 19th. And I do have a projected potential major bottom setting up over the next 2 or 3 days. So we could see a moderate breakdown here after setting these new highs. Not calling it a bearish trend, I'm calling it a pullback at this point, setting up a major low. Could be deeper, might be in this area, might be around the 598 level. But we'll see. We'll see how this plays out. The rotation today indicates that we are likely going to see you know, sideways, possibly fairly explosive price rotation. So that would indicate, in my mind, that would indicate, a rolling downward, possibly fairly volatile, maybe three quarter to 1.5% total volatility. In the QQQ, we're going to be looking at the same type of rotation. Remember, we have the ID right here telling us that we are bullish. And if we were to look at rotation here, especially after we've closed up above this high, giving us our bullish indication, we would be looking at rotation within, a fairly solid range, kind of in this area, probably somewhere between 539 and three quarter and 532 and a half, roughly, possibly rolling downward. Now, a rolling downward rotation would be, down one and a quarter, maybe 1 to 1.25%. I doubt we're going to get a big breakdown. Although in the next 2 or 3 days we could. I have that cycle pattern that sets up a deep major low around the 20th or so. So there's a pretty good chance we could get a major low potentially breaking down, maybe something like this. So we'll see how it plays out over the next couple of days. But remember, general trending now, guys, is bullish, 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 bullish. Okay. In fact, look, I'll make this a background light green so you can see we are bullish. We are, there is no second guessing the overall trend. We are bullish. Okay. It is bullish, bullish, bullish at this point. And that is because of Fibonacci Price Theory, which I teach and try to explain, including these excess phase peak patterns. This new breakout high right here invalidates all of these patterns. So they're still there, but we have gotten above the ultimate high. We are now invalidated. We are now long. So these patterns, and I'll leave them here because they're still, if we roll, we have to be aware of these supports and these setups. But again, these have been invalidated with a new high. We're off to the races to the upside, in theory. Okay. So now gold and silver. Let me copy this. Gold and silver. You can see gold and silver. Now, this is hourly. Okay. So let's come back to daily. Come back over here to daily. Get my data. There we go. And you can see here on a daily basis, we are rallying up to new highs. So I'm going to come over here, paste. We're still bullish here. We're rallying up to new highs. These new highs present a very clean breakaway. And if you follow my analysis, you know that we are moving into a very explosive move for gold. So again, we're looking at a very solid rally up into my opinion, this 32 to 33.50 area before we stall out. I think this is going to be very explosive. It's basically, as I've drawn here, going to be like a straight up rally into consolidation and then into a straight up rally that's going to go even further and even higher up into this 43 to 45 area. So, when we come over here, this is going to just roll very quickly up into this area. So we are bullish long term. We do have very clear upward trending. And where we're at here with the silver. So based on a daily basis, got to take a look at this. Let me spread this out a little bit. Okay, so we need to move this over to here. Set this up. Now, this is basic Fibonacci price theory. So I'm not doing anything here too complicated to cause any issues for you guys. Fibonacci price theory, you can learn by watching my videos. And it's basically a theory that price is always attempting to set new highs and or new lows at all times. So now what that means is that we can identify what price is doing by tracking the ability to set new highs and or new lows over time. So again, by the theory being that price is always attempting to set new highs or new lows, by tracking whether or not we're able to set new highs or new lows, we can identify what price is attempting to do and where price is attempting to trend to very cleanly. Now, when we get to new highs and we don't have any reference point above a current high price level, then we have to go down to Fibonacci extensions to try to identify where we could get into a rotation. So we have, again, looking at this chart, daily chart going all the way back, right? We have an ultimate high right up here, this purple line, $35 roughly. We have an ultimate low down here, recent ultimate low, and then we have a secondary ultimate low down here. Those are our wide points of reference. Okay. These are our wide points of reference in the sense that this is the highest high we've had in recent trading. This is the lowest low we've had in recent trading. This is the lowest low we had based off this area. So these act as kind of dual support areas. We have broken above on the way up this level. Make this a 2 and I'll make it a dark blue. We have broken above this level on a closing price basis. And we are staying above this recent standout low right here, which I will make as a red color. And we are staying above this standout low down here, which is lining up right with that previous low back over here. So as long as we're making new highs, and again, pay attention here. So we come up, here's another high. Forgot about this one. So here's another high. Make this a green. So this becomes short-term upward trending right here. We get a nice breakaway to the upside. This is how Fibonacci price theory works. It breaks above that candle right here, that high. We move into short-term trending. Why? Because this is a standout high. This doesn't give us any big, broad indicator that we've moved into any longer term or intermediate term trending. Now, when we then set this level and or this level, this is another standout high, and we break it right here, we now get into a secondary bullish trend, which is more intermediate term. And why is that an intermediate term? Is because we've gotten into short-term rotation. Now we're starting to break longer-term price cycles. You can see now the way I count what I call there's three levels of Fibonacci. So under Fibonacci price theory, there's three levels of pivot points or highs or lows. There's what's called standout, and then there's unique, and then there's ultimate. So standout are the shortest term, and those are typically 7 to 15 bars or let's call it 7 to 14 bars in length. And then unique is 14 to possibly 24 bars without a touching. And then ultimate would be 25 to say 45 plus bars. Oops, caps. So how does this work? Well, standout high, if I take a look at this high, I go backwards. I go 1, 2, 3, 4, 5, 6. Oh, it's been touched. That high has been touched 5, 6 bars ago. So it's a standout high. This high back over here, or this high over here, has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 22 bars since that high has been touched. That is a unique high. And you can visually see these. Now, when you get back over here to this high, back over here, you can see, whoa, that's way back over here. So that's more than 22, more than 24. This would be a potentially ultimate or unique high again. And when we would call it an ultimate, meaning have we gotten to a point where it has not been touched in 25 to 45 bars and it is the highest high or lowest low that we've seen in recent trading? This area here could be considered an ultimate high. This area is, and I will move this so you can see it, is an ultimate high right here. Why is that now our ultimate high compared to this high? Well, this is the true ultimate high, the highest high that we've seen in recent trading. This becomes an ultimate high, and this likely becomes an ultimate high too. I got to count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 23, 24, 25, 26, 27, 28, 29. So this would be an ultimate as well. So I can call this an ultimate. So when we get above this level here, we are now ultimate bullish, unique bullish, and standout bullish. So again, as far as trending, you can see that we are now in a solid bullish trend based on Fibonacci price theory. We have broken this high, which is very important. This level has now been broken. We'll set it off as a kind of a light color. It's been broken, and we're looking to try to move up and break above this level. This is becomes a standout. Now understand that a unique or an ultimate, sorry, an ultimate can become or is a unique and a standout. This is the highest level you can get to. It means it hasn't been touched in 45 bars, which means it also hasn't been touched in 12, 14 to 24, and which means it also hasn't been touched between 7 and 14. So you get the idea that an ultimate is a unique and a standout all at the same time. A unique can be and will be a standout, but it doesn't necessarily mean that it is a ultimate. So at this point, we have broken an ultimate high. We've set a new ultimate high here. We have the ultimate, meaning the highest price we've seen in recent trading back over here, which would be our long-term breakout. And what we're looking for is gold and silver, in this case, silver, to continue to rally. This is our standout low. We have a decent standout low down here, so I can draw this. Decent standout low here, another little standout low right there. And we would be watching for breakdowns. We also have a little standout low right here. Let me get rid of these Fibonacci's, retracements, and give you an idea that we have another little standout low right there. So at this point, a pullback would try to move down to these two levels, either here or here. A rally would try to move up to this level or higher. We are in bullish trending. We're taking out new highs. We're rallying higher. Failure to reach this high would indicate that we are going to try to come down and reach this low. So if we fail to come up and try to retest this area, we are going to roll at some point down to this area, maybe here. But given we're in bullish trending, gold and silver are moving strongly to the upside. I think we're going to be seeing a very solid carryover type of a trend to the upside. And same thing with gold. Okay. So gold is carrying very strongly to the upside. I think we're going to see a move here into March up into this 32, 3,300 area very cleanly. Okay. Don't want to waste too much time. The market's almost open. We're going to come over here to Bitcoin. And yeah, I'm not looking at my normal charts. I'm using a separate layout right now. So Bitcoin, this is daily. Let's see if we can shrink this up. Let's see if we can paste. Oh, nope, that didn't work. So let's go and we will come in here to standout, unique, and ultimate. And what we're looking at here, we got to take a look at the breakdown level. We have our ultimate high up here. This is our ultimate level, and this is our recent ultimate low. I'll mark this here as a dark green. We also have a very unique ultimate low down here, which is, a real standout kind of a low. We are rolling upwards. So now take a look at this, guys. Help me out. So I'll get rid of some of these so we can take a look. It's pretty simple. If you want to try to do this on your own, just start with the most recent highs and lows. Okay, so here's a nice little low. We can count back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So this is kind of a little bit more of a unique low that would also be a standout. We also have this low here. We have this low here. So if I come over here, and what we're looking for is new higher highs or new lower lows. So we come here, paste, drag this down to here, paste, drag this down to here. Do we have any others? We have this one way down here. So these are all of our most recent lows, and we're looking for fractal lows, like right here. This is a good fractal low. A fractal low is essentially a unique low where one or two bars on the left are higher and one or two bars on the right are also higher. So we have another fractal low setting up right here. Now, these fractal lows and highs become support and resistance. In other words, this support level, now that we're slightly below it or were, becomes resistance. And now we're looking for the highs. So we're going to look for the fractal highs. We come in here and I can see a fractal high up here. We'll make it a dark red color. And I can see a fractal high. Oops. Copy cleanly right there, right on that bar, 2 bars below it, 2 bars below it. I can see another fractal high right here, right here. I can see another fractal bar here. This is a more unique type of a standout in the sense that I don't have the 2 highs to the left. I have 1 lower high to the left and 2 to the right. Then I have a very clean fractal high right up here. And I have secondary fractal high right back over here. So you can see how easily I just mapped this out, okay, daily. We are now breaking above this fractal low back here, okay? And so this is kind of important in the sense that we've broken above that low, but we're in between this channel. So right now, if you look at this, we're in between these high channels. And we're kind of in between these low channels down here. So given that we've broken this level, which we had broken down below, at this point when we broke below the level here, it was bearish. Now we're kind of moving back up it, and we've broken back above it. It still acts as support and resistance, but we have yet to clear any new potential highs or recent lows. So our last breakdown was a breakdown here of this level, moving all the way down to here, which set up this low. We then had no other fractal lows except for right here. We broke down and we broke down. So in theory, folks, right now we are in a breakdown mode here, and we are in a breakdown mode because of this bar. So we are technically in a bearish standout. We are in a bearish unique, and we are breakout, last breakout. What's here? Back below here. And we are in a bearish ultimate. So where we're at with uh, Bitcoin is that we are rolling into a bearish sideways channel. Again, here's our big breakdown. This is our most recent big breakdown right here. Boom. That's our big breakdown below that low. We have yet to get below this low, but below this low acted as major ultimate support for quite a while. This is our last event to the downside. We have all these little standouts over here. We would have to get above this level to really start to break above. And remember, we don't have any real big breakaways to the upside in Bitcoin until we get above this red level right here. Now we are rolling. We're trying to get back above this level, which was support, is now resistance. It looks like we may move above this level, but we've got to get above this 98,000, call it 850 area, in order for us to see any real upward trending. Okay. Now, where we're at off of this low as well is we still have these excess phase peak patterns. We're still rolling into this sideways mode. We're coming off of this low. We could be setting up a rally phase here. So again, what I'm going to tell you is that if this holds off of this low and gets above this 98,850, I'll mark it over here, 98,850 roughly. I want you to be aware that that could be a very solid buy signal, trying to catch this rally through this channel up into here, potentially trying to rally all the way up. So you're moving into a changing market trend here. We just can't call this bullish until it gets above 98,850. So we're technically bearish, bearish, bearish. We're looking pretty good for an uptrend here. This may support a major market rally in the SPY and the QQQ, but I'm going to start doing this so you can see, what the actual price triggers are, based on Fibonacci price theory and my understanding of the market. So even though I warn you that we could be looking at a breakdown, I want you to see what trending really is. And we'll try to go over this over the next couple of days, make sure it reinforces into your teaching so you can see where we're at. So we're basically bearish, bearish, bearish. At this point, we've come down. This is the deepest low we've established in this downtrend, right here. So got to pay attention. Very important to pay attention to the deepest low that we've gotten to right here. You really want to pay attention to that. Failure to break that low means, and this is a unique low, failure to break this low means we are going to roll upward and try to take out the last unique high, which is right here. So understand that it's real simple theory. If we cannot establish a new lower low here, then we are going to roll and try to take out a new higher high here. Now it may fail coming up. That's the whole beautiful part of Fibonacci, is it could fail here or here or here. It could rally up into this area, stall, and come back down and take out that low. But it's teaching us that price must attempt to take out a new high or a new low at all times. So it reached a new low here. And now it's failed to hold below that low. You can see the clean rejection right here on this little bar, this little doji bar. It rejected and is moving higher. So that means it's now trying to come up, take out this level. And if it's able to take out that level and close, then it'll tag this one potentially, then this one, then this one, then eventually up into here, and possibly all the way up into the 109, 110,000 area. So right now we're technically, like I said, bearish, and we're rolling into bullish trending potentially. All we need to do is get above this 98,850 level. Once we do that, as a very clear high price breakout, then we will move into short term standout bullish trending. And then eventually we'll have to see where we get our next unique high. Throughout this move, that's the other thing. If we get this rally like this, what'll end up happening is somewhere over here or over here, we'll set up another unique high. And this will then become our secondary level for bullish trending. So understand that these constructs are like a ladder. They continue to build upward. No, get rid of. They continue to build going up or down throughout these cycles into new Fibonacci constructs, meaning it's constantly playing out as a, let's call it like a hidden map. You know, you go two steps further and it shows you a little bit more around you. You go two steps further and it shows you a little bit more. So it's very powerful once you learn to use it. Okay, guys, that's it for now. Markets are already open. Sorry I'm late.